Have you noticed a rise in your car insurance rates recently? It's not just you. Across the nation, car owners are grappling with an unexpected financial burden in the post-pandemic era. Just when we thought the declining prices of vehicles were a relief, we've been blindsided by skyrocketing car insurance costs. As the automotive market begins to recover from the production disruptions caused by the pandemic, it's not the price tag on the car that's causing a stir. It's the insurance premiums that are taking a sharp upward turn, overshadowing the joy of owning a new vehicle. This unforeseen cost is affecting over 200 million Americans who rely on their vehicles for daily transportation. A significant aspect of the total cost of vehicle ownership is now the insurance expense, making it a dominant factor in the overall cost of owning a vehicle. So, what's causing this sudden surge in car insurance rates? The pandemic brought unprecedented challenges to the automotive industry. A whirlwind of factory shutdowns and supply chain bottlenecks, particularly in the semiconductor sector, swept across the globe. These disruptions battered the industry, creating a scarcity of new vehicles and sent car prices soaring to record highs. Imagine a world where the production lines that once hummed with the creation of new vehicles were silenced. The once abundant supply chains, like life-giving arteries, were suddenly choked off. The lack of semiconductors, the tiny chips that power everything from your car's navigation system to its engine control unit, further compounded the issue. The result was a landscape where new vehicles were as scarce as oases in a desert, and this scarcity drove prices to unprecedented heights. While the pandemic raged, the automotive world was caught in a paradox. On one hand, the demand for personal vehicles surged as people sought safer transportation alternatives. On the other, the supply of new cars dwindled, creating a seller's market where high prices ruled the day. From compact cars to luxury SUVs, every segment of the market felt the pinch, but the automotive industry is nothing if not resilient. Slowly but surely, it began to recover. Factories started humming again, and the bottleneck supply chains began to flow. The introduction of new car models signaled a return to some semblance of normalcy, and the inflated car prices started to deflate. Prospective buyers who had been watching the situation anxiously began to see a glimmer of hope. The dream of owning a new or nicer car started to seem attainable once again. But as car prices start to ease, a new financial burden emerges. The sigh of relief at the sight of declining car prices was quickly replaced by a gasp of surprise. The cost of car insurance, often an overlooked aspect of vehicle ownership, began to skyrocket. As the industry and consumers navigate this new normal, the need for transparency, consumer education, and regulatory attention to this issue becomes ever more apparent. The post-pandemic era has brought with it a new challenge: the hidden cost of soaring car insurance rates. Just when you thought buying a car might get easier, insurance costs throw a wrench in the plans. The relief that comes with the easing car prices is short-lived as the reality of soaring insurance premiums sets in. This new financial burden is quickly becoming a significant part of the total cost of vehicle ownership, affecting the millions of Americans who rely on their cars for daily transportation. This rise in insurance costs is not uniform across the board. Some states are feeling the crunch more than others, with insurance premiums reaching new heights. For those contemplating a new vehicle purchase, this trend is particularly distressing. The cost of insurance is now a larger chunk of the total ownership costs than ever before. To illustrate this point, let's take a look at the experience of Darren Davis, a real estate agent based in Dallas. Darren recently purchased a Cadillac XT4, a move that should have been cause for celebration. However, this joy was quickly overshadowed when he received his new insurance bill. His premium had nearly doubled. This stark increase not only put a damper on Darren's excitement about his new car, but also made him rethink his purchasing decision altogether. Compact and mid-size cars, the go-to choices for many American households, are seeing the most substantial increases in insurance costs. This shift suggests that insurance expenses are becoming a more dominant factor in the overall cost of owning a vehicle. For the average American household, this challenges the very affordability of car ownership. The rising insurance costs are not merely a financial concern. They reflect broader economic pressures that consumers are grappling with in the post-pandemic landscape. The joy of owning a new vehicle is quickly diminished by these rising insurance costs. As the industry and consumers navigate this new normal, the need for transparency, consumer education, and regulatory attention has never been more crucial. So, what's driving these insurance rates through the roof? The answer lies in a complex web of interconnected factors. Let's unravel them one by one. First up, the modern vehicles of today. They are not just a piece of machinery anymore. They are equipped with advanced electronics, safety features, and state-of-the-art technology. While these advancements make our rides safer and more enjoyable, they also make repairs more complex and costly. A small fender bender that could have been fixed with a wrench and some elbow grease in the past now requires specialized equipment and trained technicians. These higher repair costs are directly reflected in our insurance premiums. The second culprit is climate change. Extreme weather events from wildfires to hurricanes are becoming more frequent and severe. These events are causing unprecedented levels of damage to vehicles, leading to an increase in insurance claims. It's simple math, really. More claims mean higher costs for insurance companies, and these costs are then passed on to us, the policyholders. Finally, we have labor shortages in the automotive repair industry. Now, this might seem unrelated at first, but let's connect the dots. When there are fewer technicians available to repair vehicles, the repair times get extended. During this time, many car owners need rental cars, a cost that is often covered by insurance. As a result, longer repair times lead to higher rental car costs for insurance companies, and once again, these costs trickle down to us. So there we have it. The increasing complexity of modern vehicles, the escalating impacts of climate change, and labor shortages in the automotive repair industry. Each of these elements plays a role in pushing up the cost of car insurance. It's like a perfect storm of financial pressure, with car owners caught in the eye of it. These factors combined are making car insurance a significant part of the total cost of owning a vehicle. It's a hidden cost, often overlooked, but one that is becoming increasingly hard to ignore. And as we steer into the future, it's a cost that we all need to be aware of and prepared for. With insurance costs soaring, how can car owners protect their wallets? It's a question that's been echoing in the minds of millions of Americans, and today we're going to delve into some possible solutions. First off, let's talk about bundling insurance policies. This is when you buy multiple types of insurance, could be home, auto, life, you name it, from the same provider. Insurers often provide discounts for bundling that can help offset the rising costs of individual policies. For instance, if you're a homeowner and a car owner, instead of having separate insurance providers for each, you could potentially save by having one provider for both. But, and there's always a but, isn't there? The downside to bundling is that it can sometimes lead to complacency. It's easy to simply renew the policies year after year without checking if you could get a better deal elsewhere. So, if you go down the bundling route, make sure you're still shopping around regularly. Now let's move on to another strategy, increasing deductibles. The deductible is the amount you pay out of pocket before your insurance coverage kicks in. By choosing a higher deductible, you can lower your premium. It's a bit of a gamble, though. You're betting on yourself not to have an accident. If you do, you'll end up paying more out of pocket before your insurance steps in. That being said, if you're a safe driver and you have a good emergency fund, this could be a viable strategy. However, if an unexpected accident happens, or if your savings aren't quite where you'd like them to be, a high deductible could end up being a financial burden. In the end, it's about finding a balance that works for you. Car ownership is a complex jigsaw puzzle of costs, and insurance is just one piece of that puzzle. It's important to remember that while bundling policies and increasing deductibles can help reduce premiums, they're not without their own risks. They're tools in your financial toolbox, but like all tools, they need to be used wisely. While these strategies may help, they aren't without their own risks. The rising cost of car insurance is more than just a financial concern. It's a reflection of the broader economic challenges that have emerged in the post-pandemic era. As we've explored throughout this discussion, multiple factors are contributing to this surge in insurance rates. The increasing complexity of modern vehicles, climate change-induced weather events, and labor shortages in the automotive repair industry are all playing a role in driving up insurance costs. This trend is not merely an inconvenience, it's a significant burden that is reshaping the landscape of car ownership. With insurance costs now constituting a larger portion of the total ownership costs than ever before, the affordability of car ownership for the average American household is under threat. In these challenging times, the need for transparency, consumer education, and regulatory attention cannot be overstated. As we navigate this new normal, understanding these costs and how to manage them becomes crucial for every car owner.